Hi there folks, it's Matt Hayson here looking at this week's property market and plenty going down. Let's get into it, including are we at the bottom of the market? Following 10 on the trot rate increases, we can tell you property prices are picking up, and this is being supported by the latest CoreLogic data, which reflects a 0.8% gain in March alone. This comes off the back of a 0.3% positive gain in February as well. Now, some of the key drivers behind these price gains at the moment is the low supply of listings which are currently on the market. Again, according to CoreLogic data, they're down 13.2% across Sydney, but we can tell you across our market, it feels more like 30%. And that's what we're seeing playing out in the auction market, where these volumes are phenomenally low. Last week, there were 812 properties that went under the hammer compared to the same March weekend in 2022, where we saw almost 1,200 properties. That's a decline of 32%. And also something that we don't talk enough about here is the rental market. Vacancy levels across the city are still hovering around 1%, if not lower in some of the key suburbs in Sydney. And we're seeing surging demand, and rental prices have increased north of 10% over the last 12 months. So a lot of those folks are funneling in to looking at purchasing a property. And then also this very interesting chart from Domain notes that the population in Australia is growing, and when it does go up by 1%, that normally reflects a 4.23% gain for Sydney property prices. But Paul Bloxham, the chief economist at HSBC, I think nailed it, and he said the growing imbalance between supply and demand is absolutely fueling the price gains currently in Sydney. He also went on to suggest that a lot of people do look at rising interest rates as the major force around property prices. However, it's actually supply and demand which is an equally powerful force for the housing sector. But are we out of the woods yet? As we do know, inflation does remain high, wage growth around the country is pretty much stagnant, and the rate lifting cycle has slashed 30% off the majority of borrowers' capacities. Also, more broadly around the economy in the US, 3 regional US banks collapsed during the week, and we're also hearing that Credit Suisse is looking pretty shaky. That's sending shockwaves through the share market, and there is plenty of chatter that the US could dip into a recession later in the year. Now, that could have major impacts on the global economy. As we do know, the RBA board is meeting next week, but with this latest volatility, it could mean that they could pause lifting the cash rate. So that's it for this week, folks. The sun is shining. There are lots of buyers out and about, and our entire team looks forward to seeing you this weekend. Thanks for watching. Catch you all next week.